Welcome back to Explain the Charts, your ultimate resource for unraveling the complexities of market data and making smarter trading decisions. Today, our focus is squarely on one of the tech giants, Amazon, under the ticker symbol Amazon, which has been at the center of significant market attention due to recent, sharp price movements. As of our live analysis on August 6, 2025, the sentiment surrounding Amazon stock appears to be a mixed bag, heavily influenced by its latest financial disclosures and updated analyst ratings. Reports from reputable news agencies like Reuters indicate that Amazon is currently hovering around the $213.75 mark, a price point that has become particularly critical after a period of intense and challenging volatility. Taking a step back and examining the daily chart over the past year, we can clearly see Amazon navigating a dynamic landscape characterized by substantial upward trends interspersed with noticeable, albeit sharp, corrections. The overarching trend from early 2024 suggested a robust and consistent upward march for Amazon, successfully breaching and often sustaining levels above the psychologically significant $200 barrier on multiple occasions. However, the most recent price action, particularly over the last few trading sessions, unmistakably signals a significant disruption to this previously established bullish momentum, leaving many investors and analysts to ponder its immediate and long-term trajectory. This uncertainty is further amplified by headlines, such as one from the Motley Fool just a couple of days ago, questioning whether this current dip truly represents an opportune buying window or if it's a prelude to more substantial bearish pressures. Today, we'll cut through the noise, providing a deep dive into the technicals while keeping a keen eye on the fundamental news that moves this market. Throughout our analysis, we will meticulously correlate these unfolding news events and influential headlines directly with the intricate price patterns and technical indicators visible on Amazon's charts, providing a holistic perspective. Let's now zoom in specifically on the daily chart, honing our attention on the pivotal period spanning from late July through the first crucial week of August 2025. The most striking feature here is undoubtedly the formation of a massive red candle on August 1, 2025, unequivocally demonstrating a sharp, dramatic plummet in AMZN's price. On this specific day, the stock experienced a significant gap down, opening considerably lower at $217.21, a stark contrast to its previous day's strong close of $234.11. This precipitous decline, which amounted to an approximate 8% pre-market fall from its previous close, was directly attributable to Amazon's recent operating income guidance falling short of stringent market expectations, a piece of news that quickly disseminated across financial networks. The sheer volume accompanying this plunge, exceeding an astonishing 122 million shares traded, provides irrefutable evidence of widespread panicked selling and a prevailing bearish sentiment engulfing the market participants. Despite a fleeting attempt at recovery immediately after the initial shock, the intense bearish pressure persisted, culminating in the price being pushed even lower on August 4th, where it concluded the trading day at $211.65, signifying continued capitulation among investors. This multi-day cascade definitively established a crucial new short-term support zone, firmly cemented around the $211 to $212 price territory. This specific range, representing the lowest price points reached during this significant downturn, now serves as a critical technical level that demands very close observation moving forward. Intriguingly, on August 5th, we witnessed the emergence of a small yet highly significant green candle, with Amazon managing to close higher at $213.75. This positive candle serves as an initial, albeit cautious, indication that buyers are beginning to step in, perceiving value and absorbing supply at these depressed price levels. This nascent recovery attempt aligns well with the ongoing positive analyst commentary, such as HSBC's reaffirmation of a buy rating with an ambitious $256 price target. Furthermore, TipRanks, while acknowledging near-term struggles, highlighted a substantial 23.4% upside potential, fueling longer-term investor confidence. Additionally, the recent disclosure of Amazon's considerable $36.7 million stake in IonQ, while perhaps not directly impacting its core e-commerce or cloud operations, could be interpreted by growth-oriented investors as a strategic vote of confidence in emerging technological sectors, subtly contributing to the positive sentiment. This blend of technical reaction and news suggests a complex tug-of-war between short-term concerns and long-term optimism. While our available one-hour chart data provides a snapshot only up to July 25th, preceding the monumental August 1st event, it nonetheless offers invaluable insights into AMZN's trading characteristics leading directly into that period. From July 16th to July 25th, the stock demonstrated a clear pattern of relatively tight horizontal consolidation, predominantly oscillating within a narrow band between $227 and $233. This range-bound price action, conspicuously accompanied by noticeably lower trading volumes when compared to the subsequent crash, strongly implied a market engaged in a holding pattern, patiently awaiting a definitive catalyst to dictate its next major move. During this specific period, the $227 price level consistently served as a robust and reliable area of support, effectively preventing any deeper declines. Conversely, the resistance established around $233 persistently capped any attempts at significant upward momentum, indicating a ceiling of supply. Such distinct consolidation patterns are frequently observed precedents to either a major upward breakout or a sharp downward breakdown, as the underlying forces of supply and demand gradually reach a delicate equilibrium before a decisive push by either bulls or bears. Observing these tighter ranges on shorter timeframes before major news releases can be a key indicator for experienced traders, signaling potential volatility ahead. For agile short-term traders, recognizing and understanding these pre-event consolidation zones can be absolutely paramount for anticipating and strategically positioning themselves in advance of the potential impact unleashed by major news releases. To gain a truly granular understanding of the most immediate price action following the profound dip, we now pivot to the 15-minute chart, specifically analyzing August 5th, 2025, which represents the latest complete trading day available in our dataset. After the severe, consecutive daily drops observed on August 1st and August 4th, the stock commenced trading on August 5th around the $213.05 mark, and initially, it did encounter some lingering selling pressure, pushing it slightly lower. However, as the trading day progressed, we can clearly discern a noticeable and encouraging shift in market dynamics, characterized by the more frequent appearance of green candles, signaling that buyers were progressively becoming more assertive. The absolute low point recorded on this particular day was approximately $212.87, a level that remarkably held firm, definitively demonstrating that the $211 to $212 price territory is indeed actively attracting fresh, supportive capital. The repeated testing and subsequent rejection of lower price points within these granular 15-minute intervals collectively paint a compelling picture of a concerted short-term accumulation effort by astute buyers. This indicates strong demand entering the market around these levels, effectively absorbing the remaining selling pressure from earlier days. Crucially, trading volume remained consistently robust throughout this stabilization period, providing strong evidence of active market participation as the stock valiantly attempted to arrest its decline and reclaim some of its recently forfeited ground. For short-term traders, the sustained defense of the $211 to $212 zone on this timeframe is a critical bullish development. A break above the intraday resistance levels, particularly near $215, which saw selling pressure earlier, would validate this newfound strength. This detailed chart vividly illustrates the ongoing, immediate battle between the entrenched bears and the re-emerging bulls, with the latter group showcasing commendable resilience in preventing any further significant capitulation below the critical $212 threshold. Bringing all elements of our comprehensive analysis together, it's abundantly evident that Amazon has recently navigated a period of profound challenge, primarily stemming from its latest financial guidance and market expectations. For the immediate future, the most absolutely critical short-term support level, definitively established during the ferocious recent volatility, is the tightly clustered 211 to 212 US dollar zone. This specific price range, marking the bottom of the recent significant decline, has now been rigorously tested and demonstrably held, signaling its importance as a crucial psychological and technical floor for the stock. A sustained and convincing break below this 211 US dollars mark would undoubtedly constitute a potent bearish signal, potentially opening the floodgates for further downside. In such a scenario, we could foresee a rapid decline towards the 205 US dollars level, and even a retest of the crucial 200 US dollars psychological threshold. A downside scenario to which we assign a 35% likelihood if market-wide selling pressure dramatically intensifies or new negative catalysts emerge. Conversely, on the path to recovery, immediate and formidable resistance can be identified around the 215 US dollars price point, a level where previous earnest attempts by buyers to initiate a rebound were met with substantial selling pressure. Beyond this initial hurdle, a far more significant challenge for Amazon resides at its former support, which has now robustly transitioned into a strong resistance zone, precisely at 227 US dollars. Successfully overcoming the 215 US dollars resistance, particularly if accompanied by convincing and rising trading volume, would serve as the inaugural and most crucial step towards validating a genuine short-term bullish reversal. Such a move could realistically pave the way for a retest of higher price targets, potentially reaching the 220 to 225 US dollars range within the span of the next few weeks. A development we estimate carries a 45% likelihood should positive momentum continue to build effectively on the broader market sentiment. Should Amazon breach 227 US dollars, its prior highs near 234 US dollars would then become the next significant target, albeit a more challenging one to achieve in the near term. Short-term outlook, based on the current synthesis of chart patterns and immediate market reactions. We widely anticipate Amazon to largely consolidate and trade within the confines of the 211 US dollars to 215 US dollars range for the next few trading days, as the market assiduously digests the full implications of the recent news. The probability of this consolidation phase successfully holding steady is approximately 60%, a reasonable assessment given the current juxtaposition of mixed signals and the discernible, albeit nascent, renewed buying interest observed at the recent lows. Long-term outlook. Despite the immediate short-term struggles and the recent price correction, the fundamental long-term outlook for Amazon, intrinsically supported by its unparalleled dominant positions in both the e-commerce sector and the rapidly expanding cloud computing industry through AWS, continues to be viewed with considerable optimism by a significant number of leading analysts. Aggressive analyst price targets, consistently placed above the 250 US dollars mark and even reaching 264 US dollars from tip ranks, inherently suggest substantial long-term upside potential, thereby making the current price dip potentially an exceptionally attractive entry point for patient, long-term investors willing to weather short-term volatility. However, it is crucial to acknowledge that a prolonged global economic downturn, intensifying regulatory scrutiny, or a significant intensification of competition across its diverse business segments could realistically pose considerable challenges to this otherwise optimistic long-term thesis. Key factors to monitor. Investors and traders should diligently keep a very close watch on Amazon's forthcoming earnings reports, with particular attention to the critical growth figures for its highly profitable AWS cloud division, as this segment is a major profit driver. Further updates pertaining to its strategic investments, such as the recently disclosed stake in IonQ, will also be important indicators of the company's long-term vision. Broader global macroeconomic indicators, encompassing inflation data, interest rate decisions by central banks, and overall consumer spending patterns, will also exert a profoundly crucial influence in shaping AMZN's trajectory in the months to come. Finally, a reminder that diligent, independent research and thorough due diligence are indispensable for successful trading. Always ensure that your trading and investing decisions are meticulously aligned with your carefully assessed personal risk tolerance and overarching financial objectives. Thank you immensely for tuning in to Explain the Charts. If you found this in-depth analysis beneficial and insightful, we kindly ask you to hit the like button, subscribe to our growing channel, and activate the notification bell so you are promptly alerted to our very next comprehensive market deep dive.